So, you think McDonald's is in the business of selling burgers and fries, right? I mean, it makes perfect sense. But what if I told you you're wrong? Today, we're going to uncover the real secret behind their global empire. And spoiler alert, it has almost nothing to do with what's on the menu. Let's dive in. See, this is the central question. The answer is how a fast food joint became one of the most powerful corporations on the planet. It's not about what they sell, it's all about what they own. And right here, this is the heart of it. This is the great McDonald's illusion. While you're grabbing a Big Mac, they're busy collecting rent. They have built a truly massive real estate empire, all cleverly disguised as a simple restaurant chain. So, how in the world did they pull this off? Let's break down the mechanics of this illusion and see exactly how a humble burger stand became one of the most sophisticated landlords in the world. The foundation of their entire strategy is right here on this chart. A staggering 95% of their restaurants are owned and run by franchisees. Think about that. This means McDonald's corporate doesn't have to deal with the day-to-day chaos of actually running a restaurant. They just get to collect the checks. Okay, so if they aren't flipping burgers, how does the money actually flow to them? Well, it all comes down to their brilliant and incredibly profitable landlord model. It's a real 1-2 punch. First, you've got a royalty fee, maybe 4 to 5% of sales, just for using the brand in their systems. But the real moneymaker, the core of the whole engine, is the rent. Franchisees don't just pay for the name, they have to pay rent on the building and the land itself. And here's the truly genius part. It's called the Triple Net Lease. This legal setup means the franchisee is responsible for, well, pretty much everything. Property taxes, building insurance, all the maintenance. McDonald's is totally insulated from all those costs. They just collect the rent, basically risk-free. It's incredible. The sheer scale of this operation is just mind-blowing. If you were to take all of McDonald's real estate and turn it into its own company, it would be the largest of its kind on the entire planet, worth an estimated $120 billion. That is the power of owning the land under those golden arches. So, we've seen the model. Now let's look at the numbers. This is where you can really see exactly why being the landlord is so much better than being the cook. Okay, look at this. For every single dollar of profit made at a franchise location, McDonald's corporate gets to pocket about 82 cents of it through rent and royalties. Now, what about at their own stores? A measly 16 cents, because, they have to pay for everything themselves. Their entire business is built to maximize that 82%. And here's what that looks like on the bottom line. A typical, very successful restaurant, they're happy with a 6 to 9% operating margin. In 2024, McDonald's posted a margin of 45%. That's not a restaurant business. That's a tech company. And the result of this whole model? Well, in 2024 alone, we're talking nearly $12 billion in operating income and almost $7 billion in free cash flow. And these aren't just big numbers. They are incredibly stable and predictable. They come in month after month just like clockwork. But you know what? They're not stopping there. Their current strategy is called accelerating the arches, and it's not about changing the formula at all. It's about putting it on steroids. Their plan is actually pretty simple. Build more stores and use technology to drive more sales. And notice how every single one of these pillars, development, digital, delivery, drive-through, they all result in higher franchisee sales. And of course, every extra dollar a franchisee makes means more rent and royalty income for corporate. Their development goal is just massive. They're targeting 50,000 restaurants around the globe by the end of 2027. Every new location is another tenant, another long-term cash cow for the corporation. And their digital goals are just as ambitious. 250 million active loyalty members. Why? It's simple. The data from those members helps franchisees sell more stuff through targeted marketing. And when franchisee sales go up, well, you know the drill. McDonald's gets a bigger cut. So, they've built this incredible cash-generating machine. But where does all that money actually go? Let's follow those rent checks to their final destination, the shareholder. Their philosophy here is crystal clear. Shareholders come first. Paying dividends is their absolute #1 priority. It comes even before reinvesting in their own business. That signals just an immense amount of confidence in how stable their cash flow is. And they've got the track record to back it up. 48 straight years of increasing their dividend. That's the kind of consistency you only get from a business that's as reliable and predictable as a landlord collecting rent. The result of all this? A staggering $7.7 billion returned directly to shareholders in 2024 alone through that combination of dividends and stock buybacks. This quote from our source material really just says it all. You have to forget about the food for a second. At its financial core, McDonald's is a resilient asset-backed royalty collector. It's a real estate company that just happens to use hamburgers to fuel the whole system. Kind of makes you wonder, doesn't it? What other iconic brands out there are playing a completely different game than the one we all think they are?